Welcome, friends. My name is Avinash Gorakshakar, and I welcome all of you to another interesting episode of Konexio HighFlyers. Friends, as all of you are aware, these episodes help us understand companies better. We bring to you emerging companies from emerging sectors and talk to the promoters and the top managements of such companies. And in this process, we get a lot of valuable information as to what is the company's business model, their growth journey, their future growth plans. And in this process, investors are, benefited by getting a lot of valuable information which helps them take a conscious investment call. And friends, today we have got a very interesting company which operates in a very niche space. The company's name is Stallion India Fluorochemicals Limited, and we have the privilege of having Mr. Shazad Rustomji, who is the chairman and managing director of the company. Mr. Rustomji, thank you very much for sparing your valuable time. I think it's a pleasure for me to talk to you. And I think this small interaction will be very beneficial for all of us to understand your company in a much better way.
Thank you for having us.
Yeah. So, Mr. Rustomji, first elementary question from my side would be if you could explain to us what is the business model of our company, what is the main product we make, and what is the positioning of our company in the domestic market. This is a large market, I understand, and you have been a very well-established player. The second question, which is related to you, is if you could tell us something about your company's business journey. Did you start it as a first-generation enterprise, or did your father start it and then you took over? So, if you could add some color on this.
This is the first generation. I'm the first generation for this company. This company was started by me. We started our journey in 91, 92. And it's been a long journey. Where we started out, the difference from other companies, maybe over such a long period, is we were very clear right from day one where we wanted to reach. And we have been singularly focused on that path. So currently where we are is very much what we envisioned in 94, 95 when we started seriously moving down this road. So it's very much clear. Basically, we started in our first unit at Panvel, and thereafter we started moving into a pan-India operation. This unit was set up in Manesar, Gurgaon. We set up a third unit at Khalapur near Patalganga, near Reliance Patalganga. The fourth unit came up at Gilot, that is near Nimrana, Rajasthan. And currently, with this IPO, we propose to have, we already have the land acquired. We propose to have a facility at Mumbai, which is very close to adjoining Sri City. It's in Andhra Pradesh, but it's basically gives you equidistance the to Tirupati Airport and Chennai Airport. So you've got the best of both the industrial layouts. And the expansion also has the semiconductor gases coming up on the additional land that we have in Kolhapur. So basically, as a business model, initially when we started off, we were simple importers of refrigerant gases. Then we moved to bulking, that is getting gases in bulk tankers, having it unloaded into our plants, having it packed here, tested here, packed here, certified, and then supplied to customers, and also supplying the entire market requirement of each of these customers. After we transgress to moving our own blending. Now you have to understand the fluorine gases. They have a multiple of usages. They use the same. It's the same family of chemicals basically, but has usage across every segment in the industry. Like you've got the pharma propellants, you've got the normal propellants, you have agents, you have the fire extinguishers, you have then you have uh, each of the different products in its own way, like for treatment of glass, making glass neutral, removing the alkaline bloom, then insulating gases for the electrical industry for transmission and distribution. So it's across a wide spectrum of the industrial usage that all these products come under. And basically, as we've grown, as we started doing the blending in-house, now blending is basically in this family of fluorines. You may have about like total, say, meaning the technically, if you go as to the list, there are hundreds, but I'm saying in active use, about 40 products. Out of 40 products, about 8 to 10 products would be a single molecule. Now, the remaining 30 or so would be a blend of these 10 molecules. That part we are doing. Then the aftermarket requirements, like having the product canned and provided for the service segments, etc. That is so basically what we are doing is uh, having currently the facility. What we have is handling in-house blending, which is a form of manufacturing. You're taking 2 or 3 products, making a new product which is irreversible, and also the pan-India distribution of these products.
Okay.
Currently, activity is there. Post IPO,
Yeah.
it will move to the newer products what we are intending to do.
Mr. Rustomji, now if you could tell me something, that what is the kind of marketing network our company has established? Because basically, you need to have a good marketing network to cater to the B2B customer. So if you could give us some color on that, what's the kind of network our company has built?
It's you have to understand the market is divided into 2 segments. One is a OEM segment, one is a aftermarket segment. Now, when a product is new, when you're entering a new product, like currently the HFOs are coming in, at that time, 100% volume for the first 2 years will only be OEM sales. Thereafter, you will slowly start progressing into aftermarket sales. But when the product reaches about 10 years, it is 80% aftermarket sales, 20% OEM sales.
Okay.
So basically, what happens is the HFC part of the business, hydrofluorocarbons, which are now due to the global warming potential are on the phase out as per the government mandate and as per the Kigali Accord. So the HFC part of the business is 80% aftermarket, 20% OEM.
Okay.
It could be at the best could be 25% OEM, but more
Okay.
towards 50%.
Okay. No, no,
The HFC business is currently 100% OEM driven.
okay. Fine. Mr. Assamji, now if you could tell me, you mentioned something about 40 SKUs which you have broadly in the business. I just wanted to understand that what's the present revenue breakup for us as of March 24, which is the last financial year. A broad breakup of what product is fairly dominant in our product base. If you could give us some color on that.
Okay, as on 30th September, our
Okay.
refrigerant products
Yeah.
occupied about 87%.
Okay.
The other products occupied 13%.
Okay. Fine. And Mr. Rustomji, now coming to the current market dynamics, without giving a number, if you could just tell us, what's the kind of demand scenario which you are seeing on the ground from customers? What kind of feedback are you getting? Because this is a large market. You have been a very well-established player in this market. So if you could share with us what's the overall demand outlook, without giving a number, at least if you could share your thoughts on the business potential, of our product over the next, say, 3 to 4 years.
Uh, Basically, currently India is going through its third cycle of phase out of existing product and incoming new product.
Okay.
Now, incoming new products are heavily patented, hence it restricts most people from handling it. Our association allows us to handle those patented products, giving us a distinct advantage. And secondly, also those products are 10 times costlier than the existing products that are being phased out. Hence, it gives us a revenue advantage also. So, first thing is the Indian market has been consistently growing. India, if you remember from 1990, 95, when the opening up of the market happened, if you can remember pre 1990, what it meant to own an air conditioner, and today
Right.
what it means to own an air conditioner. So the
Exactly.
market has evolved enormously. It's completely changed with all the MNCs that have come in. More importantly, is we were a country with such poor penetration of these comforts, which were treated as a luxury. Today, it's a necessity. Meaning
Exactly.
your car air conditioner, your home air conditioner, it's no longer a luxury; it's a necessity. So, and it's affordable almost by everyone today. So the
Exactly.
penetration that is growing year on year, like companies, all our end customers, the major manufacturers, the white good manufacturers, all of them are seeing year on year growth of 15%, 10%, 20% also. And this is
Exactly.
expected to continue for the next 5 to 7 years.
Okay.
The
Understood.
penetration percentage is
Yeah.
still very poor compared to the West.
Yeah. I think very nicely articulated by you, Mr. Rustomji. I think the potential is really very large, as you rightly mentioned. Tell me one thing, Mr. Rustomji, that in terms of the product pricing, how does the product pricing work? For example, I believe a reasonable part of your raw materials are imported. Please correct me if I'm wrong. So basically, how does the pricing work? Is it a fixed price contract price with your existing customers, or is it basically on a case to case basis? If you could just give us a broad idea of how pricing works in our industry.
Basically, a significant portion, meaning I would say almost entirely, uh, current costing is directly dependent on the imported costing. So the same disadvantage that we have, also many of our peers have, because although they may not import the finished product, the raw materials to make that finished product are also imported. So,
Okay.
so ironically, one way or the other, the import factor is there for everyone.
Okay.
Now, the pricing is usually till 2000, I would say till 2017, 2018. It was like an annual price that you would fix end to end, back to back. You would be entering into contracts all over, and you would be fixing a sort of a fixed rate contract everywhere. Now, typically post COVID, what the new development is, nobody will enter more than a quarter.
Okay.
You have a choice between a quarter, monthly, or 6 monthly. But in current scenario, it is so fast, it's so dynamic, it's so fast changing. There's so many things that have changed from earlier. All the products that were free for import today are all restricted. Products are on a phase out timeline. So your
Okay.
dynamics of this industry have changed.
Okay. So understood. Mr. Rassamji, now talking about the competitive landscape in our industry, I just wanted to understand, there are a handful of players, but then what's the level of competitive intensity? Is it very fierce, or does the market, provide a very big opportunity for everybody? Because clearly there are a handful of companies who operate in this segment. We are one of those. So tell us, sir, what is the competitive intensity? I mean, do you expect that, despite a handful of players, you expect the market structure to remain as it is, and there's ample growth for all the players to grow? So if you could share your thoughts.
See, the growth prospects are enormous because what has changed is it's not only the Indian market that's available, it's also the export market that's available.
Okay.
Post COVID, the market has seen a big surge in alternate to China.
Okay.
Indian manufacturers today are looked upon as a very viable alternate to China. So the growth prospects in terms of like US, all the products that come from China have got over 100 to 250% anti-dumping duty in US. From
Okay.
India, there's no anti-dumping duty. So as you progress and you make more in India, the field for you in terms of exports also is there. Plus the Indian, as far as we can see for the next 5 7 years, that won't peter down.
Okay. Okay. No, understood. Mr. Rassamji, now, let's keep numbers a little aside. I just wanted to know, we have been in this business for a long period. How do we add value to our customers, and how do we ensure that we get continuous repeat business from them? As you said, replacement is a large component of the business. So, in your own assessment, if you could spell out two, three qualitative points for us, that in how do we actually add more value to the customer? Is it terms of service? Is it terms of execution? Is it terms of your product quality? If you could share your thoughts on these qualitative aspects, and that would help us understand the company's profile in a much better manner.
See, quality plays a critical role here because each of the products have each end user, each customer has got extremely strict quality control norms, and meaning your product has to meet that. If they say it's 99.99% purity they want or 99.95%, it cannot be below that quality norms. Number one. So quality is how to say non-compromisable part of the business. So quality, definitely those who can consistently provide quality with zero defect, there's definitely a major advantage and major choice for the customer. Second part is consistent on-time delivery. Most of the companies have moved away from the mode of having huge stocks, buying once a month, etc., and they moved to that what is known as a JIT, just in time methodology of the Japanese companies. So nobody now wants to maintain a weak stock. They want today and tomorrow's production stock only. So what they require is companies who understand streamlined logistics, where there can be no failure and just-in-time supply. That is a major game changer for the when you're and third thing is your understanding of what the global markets are, what are the dynamics in the entire industry, where if we have seen huge every 2 years there have been major boom bust cycles. It's it's a very proper curve that happens where after 2 years you'll suddenly find all the prices have reached the sky. It's gone up 100%, 150%. That time there's a major shortfall, and customers don't want to work with someone who comes and puts their hands up. They want a company who knows the commitment of the contracts you've signed, and
Okay.
during these periods, you are there to ensure that they get whatever has been committed.
Okay.
This is a major defining part in the total business cycle.
Okay. So fine, Mr. Sanji, one latest development which happened in the markets of late. I think you must be aware. We heard in the market that in the US, refrigerant gas prices have increased significantly. I don't know what's the impact of that on the Indian markets, but since you are an established player here, I mean, do you think that if global prices of refrigerant gases increase, will that also benefit Indian players? I mean, just a thought. If you could please share your thoughts.
It's a happy time and a happy place to be in the current scenario. It's there are a lot of reasons for the movement and pricing. One is um, basically the first quota cuts as per the Kigali Accord have cut in, where the
Yeah.
Chinese, the predominant manufacturer, dominant player, 85% of the global market manufacturing is China. So
Yeah.
when they get a 10% cut, that impact is significant. So then they
Okay.
raise the prices to make up for that. Number
Okay.
one has been the movement of the dollar, the forex, raw material pricing going up. So definitely, it's the pricing has moved up significantly. It is going to definitely benefit local players in India. Meaning,
Okay.
you can see the impact on the markets, how they're treated.
Yeah.
So it's definitely a good development, and it's for the industry. It's a very positive current period.
So I think thank you for the inputs, Mr. Rustomji. Now let's come to the financials. I was seeing our financials for FY24 have improved significantly. We made a profit of roughly about 14.7 crores. Previous year it was 9.75 crores. And this happened on a very moderate increase in your top line. I think 235 crores from 224 crores. The first half has been extremely robust. I think you have made a profit of almost 16 crores. So, Mr. Rustomji, first question is, for FY24, how did you manage to show a big bump up in profitability? Was it because of better margins, better prices, better execution, increased capacities? And the first half, has been really great. You all have done something like 16 crores. So, what has actually happened in these first 6 months for the profits to actually jump significantly? If you could please share your thoughts.
When we started this business in '92, we had a proprietary concern. I was the sole proprietor. It was called Stallion Enterprises. And in 2002, we formed this company, Stallion India Fluorochemicals Private Limited. Unfortunately, there was a huge excise credit available in Stallion Enterprise, in those days exceeding 10 crores. And what we realized is if we just change over or take over, we're going to lose that credits. So
Okay.
we let that firm be. And the new businesses, the new expansions were done in the private limited company.
Okay.
Now in 22, we decided that okay, we want to go, we want to start getting listed, start getting more organized. At that time, in 23, in a slump sale, we took over the private limited company. Now, in all the figures and numbers, that did not appear. What was considered was only the private limited numbers. So now what you're seeing is the combined sales coming into effect.
Okay.
That is one part of it. So of
Okay.
enhanced numbers, you will see the numbers significantly enhancing still, but
Okay.
definitely the margins have improved, and a push for sales, etc., has improved significantly.
Okay. Okay. Now, I understood. I think very nicely explained by you, Mr. Rustomji. Now, let's come to the most important question for this interview. Mr. Rustomji, we are going public now. So, please tell me what is the objective of raising, money from the capital markets, and what is the quantum we are planning to raise? If you could please, give us the inputs.
Uh, Basically, the main reason for going public is getting listed is onwards as we move. You've seen the trust India has given towards the semiconductor business. Number one, uh, the growth in that industry is going to be significant. There is a lot many products. Like I'll give a simple example, like helium. Nobody manufactures helium; it comes from the ground. But handling of helium is pretty critical. It is knowledge based, number one. It needs good high capital, number two. Number three, the volumes, etc., that you're talking. So each of the products like that are going to be very capital intensive, because the growth that will start coming into India with the semiconductors, it's not just semiconductors, fiber optics, MRIs. MRIs are the major of helium. So now I'm just taking one product as an example to explain. But each of the product ranges are going to grow phenomenally, and the numbers would be huge. It would be capital intensive, number one. And in the
Okay.
normal progression as we go forward, post 27, etc., as we go forward, the company might decide onwards that we might want to do some backward integration. So at that time, if you're listed, you're already ready. The public has already seen your performance. You're a tried, tested company. Your figures are there for everyone to see. Suddenly you come in 27. That time you're still again, however big you may be, you're still untried, untested. So
Okay.
here, whatever our commitments are, it's there for us everyone to see.
So basically, Mr. Rustomji, I can please correct me if I'm wrong. So most of the money is used basically for growth capital. I mean, is this right?
No, significantly, a portion is going to be used for capex, the two plants that are going to be coming up, and
Okay.
I think about 80 or so would be used as for uh, uh, for the capital for the business.
Okay. Okay. Understood. Mr. Rasamji, now let's talk about the working capital cycle in our business. Since we are largely catering to B2B players, tell me one thing that both in the domestic and the export market, what is the kind of working capital cycle in our business? If you could give us some color on that.
Roughly, it should be about 3 months.
Okay. So typically the cycle is 3 months, right?
Yes.
Okay. Okay, now, Mr. Sanji, will come to the last question, which we ask almost all the promoters. We have seen COVID, and now, fortunately, things have come back to normal. Tell me one thing, Mr. Rustomji, what is the single most risk in our business? Is it execution? Is it the product quality? Is it demand? Or is it some geopolitical factors? Because, a large part of our raw material is imported. So, in your sense, in so many years which you have managed the company, what is the single most risk, and how have you managed this risk so well up till now? So, if you could please share your thoughts.
See, definitely, the forex plays a major role. Like sudden movement in forex, like what has happened today, you've seen a sharp drop in the rupee. So forex is definitely a part that has a major impact. The movement in forex. Uh, Other than that, the government policies in the last 20 years has been positive towards growth. Government has been making things more transparent, etc. So I don't see any major risk or anything from that side. Environmentally, there are challenges. There are changes that we are seeing globally everywhere. We would be foolish to think we are insulated from that. So those sooner or later those are going to prove challenges in India also. But other than that, most businesses have their contingency plans. They foresee, like we ourselves foresee, a lot of things that are possible that may happen, and you've already made your plans in place when that happens. COVID is something that changed everything. COVID
Yeah,
was something nobody could believe could happen, not in our lifetime, but it
exactly.
happened. So now everyone has learned one lesson. Don't think it's improbable. Have a plan for it.
Okay,
So
okay. No, no, I think very well said by you, Mr. Rustomji. It was a pleasure talking to you. Please accept my best wishes to you, your entire management team, and sir, best wishes for your forthcoming public issue also. Thank you very much.
thank you, sir.